Okay. Read the 24th question. Come on, somebody.
Which cost is less than budgeted when actual production is higher than budgeted?
If actual production is more than your budgeted production, which cost will be less than the budgeted? Let's talk about the cost. Fixed cost. We have two types of cost, right? Fixed cost. One is the total fixed cost and one is the total fixed cost per unit. Are you with me?
Yeah.
And when you have variable cost, one is the total variable cost and one is variable cost per unit. Let's talk about variable cost per unit. What is the nature of variable cost per unit? What is the nature of variable cost per unit? It remains fixed.
Yeah.
Okay. Suppose if I am producing one product and to make that product, I would need one cone of wheat or whatever. If I'm making one ice cream, so to make every ice cream, I would need this cone. And to make one cone, maybe I'm spending $1. So every product that I will increase, I have to spend $1.
Yeah.
Yes. So variable cost per unit always remains fixed. Are you with me?
Yes, yes.
Total variable cost will increase if the production will increase. And it will decrease if production will decrease. So I want to know which cost is less than budgeted if actual production is higher. If actual production is higher, total variable cost will be higher. So there is no option of this book. Now tell me between A and B, what option are you choosing? Let's see. Total fixed cost always remains fixed. If I am spending 10,000, total fixed cost will always remain 10,000 irrespective of production. Are you with me?
Yes.
Okay. If the production is increasing, say I spend 10,000 for 10,000 units. If my production is increasing, I will still spend 10,000 and I am making 15,000 units. Tell me what will be the fixed cost per unit? 10,000 divided by 15,000, my fixed cost per unit will become 0.66.
Yeah.
So the nature of fixed cost is the total fixed cost will always remain fixed. But the fixed cost per unit, what will happen to it?
It'll change.
It will increase if production reduces.
And it'll decrease if production increases.
And it will decrease if production increases. Are you with me, Arish?
Yes, miss.
So now tell which option you choose, option A or option B?
A.
A. So the question is, which cost is less than budgeted if actual production is more than budgeted production? If actual production is more, that means the fixed cost per unit will decrease. Let's go to the 25th one. Try it. The following information is available about a customer's order. I have a customer order, direct material, direct labor, cost per labor hour, fixed overhead absorption rate per direct labor hour. The order has a markup calculated at 20% of the total cost. Markup is 20% on cost. That means it is 1/5 on cost. So it will become how much on sale?
1/6.
It will become 1/6 on sales. What is the selling price? Try it. Arish, please take a book and pen and try it, okay? Just don't sit and hatch eggs.
Yes, Miss, I'm trying.
Miss, you'll multiply cost per labor hour with fixed overhead absorption rate,
Fixed
no?
overhead absorption rate is per direct labor hour. Now, if you see, cost per labor hour is 7. And my total direct labor cost is 42. So can I get my labor cost per unit? Or labor
Yeah.
hours per unit? So whatever number of hours that I'm spending to make 1 unit, multiply with cost per labor hour, this will give me my total direct labor cost. So the labor hours per unit would be 42 divided by 7.
So 6. Yeah.
So the labor hour per unit is 6. That means to make 1 unit, I need 6 labor hours. And fixed overhead absorption rate is per direct labor hour.
So 6 into 6.5.
Now think and tell if you understood this. If not, I will explain again why I did that. I need to find out the selling price per unit. So I need the cost per unit. I have the direct material cost, I have the direct labor cost per unit. But for fixed overhead, they told me that fixed overhead is absorbed at the rate per direct labor hour. So I need to know how much labor hours is needed for 1 unit. So it would be 6 into 6.5. This makes it 39. Now if I add all this, I will get my total cost. Total cost will be 75 plus 42 plus 39. What is the amount coming?
156.
इसमें ऐड करो प्रॉफिट 20%. It's markup, so it is on cost. So what amount I'm getting? Are you all with me?
Yes, miss.
Next one. So this is May June 2014 paper 11. Next one. What are the overhead absorption rates? How do you find overhead absorption rate? How do I find overhead absorption rate? Hello?
Budgeted overhead upon budgeted activity level.
Budgeted overheads upon budgeted activity level. So when I'm talking about budgeted overheads, prime cost is overheads or it is direct cost? Is prime cost overheads or it is direct cost?
Direct cost.
Direct cost. So when I'm writing budgeted overheads, will prime cost be a part of the budgeted overheads or not? Will
It will
prime
be a part.
cost be a part of budgeted overheads?
Yes.
No. Now look over
No,
here.
miss.
When I'm talking about budgeted overheads means indirect cost. When I talk about my cost is made up of two parts. One is the direct cost and one is indirect cost. Direct cost is called the prime cost. Indirect cost is called the overheads.
Yeah, miss. So you just divide indirect cost with the higher hours.
Yeah, so I have assembly department and I have polishing department. So budgeted
Yeah, so
overheads for assembly department is
996 divided by 100.
budgeted activity level will be the higher one.
Yeah, so it's option A.
I don't know, let me find 996 divided by 100, so 9.96. With me,
Yes, miss.
can I move ahead?
Yes, miss.
Okay, fine. A manufacturer has a total production cost of 50,000 to make 20,000 units. So to make 20,000 units, he has incurred 50,000. This increases to $60,000 if production increased to 25,000. So I'm writing the units over here and I'm writing the total production cost. So if he is making 20,000 units, what is the total production cost? 50,000. And if he is making 25,000 units, the total production cost is 60,000. What is the cost to make 35,000 units? Now just remember over here, when I talk about my total production cost, it includes two types of cost in it. Fixed cost and variable cost. Are you with me?
Yes, miss.
Okay. If I get either of the element in this, I can find out the other element. So there is one formula to find out fixed cost. Formula to find out fixed cost included in total production cost. It is change in units upon change in the costing. A change in the cost. What is the change in the cost?
10,000.
What is the change in the units?
5,000.
So change in cost divided by change in units will give you
So
how much?
2.
So it is dollar. It is $2 per
2
unit.
per unit.
I have not calculated fixed cost, is I have calculated variable cost. Variable cost per unit is $2 per unit. Are you with me?
Yes, miss.
Okay, fine. If variable cost per unit is $2 per unit, so 20,000 into $2. This will give me how much? 40,000. This is the total variable cost.
Yeah.
So tell me what will be the total fixed cost? For 20,000 unit, what is the total production cost? For 20,000
50.
units, what is the total production cost? 50,000.
Yeah.
I found out the variable cost that is included in my total production cost. So it is $2 per unit. Yes.
Yes.
So 40,000 is the variable cost. Can you tell me what will be the fixed cost?
24,000.
Total production cost is how much?
Okay, 50.
Total variable cost is how much?
40,000.
So what
Okay,
will be the
so
fixed cost?
50,000 into 20,000
Oh
divided by
my
40.
God. Oh my God. Fixed cost is the cost which is fixed irrespective of production.
Oh, okay.
It
So
will be
it'll
10.
be 10,000. No.
Yeah.
Okay.
It's,
Let's do it
it's
Yeah.
again.
10,000.
Okay, let's do it again together. What is
Yeah,
the
Miss
first thing that you will find out? What is the first thing that you'll find out?
The
The
total
variable cost
per unit
included in
Production
total
cost.
cost.
total production cost. Okay, how do you find that?
Change
Change
in
in cost upon change
cost
in.
upon units.
What is the change in cost?
10,000 and 5,000. So it'll be 2 per
10,000
unit.
divided by 5,000. So it would be $2 per unit.
This is for variable cost, no,
This is
miss?
the variable cost, yeah.
Ah,
Now
okay.
look over here. I'm writing, okay? Units, total variable cost, total fixed cost, total production cost. Are you with me?
Yes.
20,000 units. What will be the total variable cost for 20,000 units?
40,000.
40,000. 20,000 into 2. Total production cost I've already added, okay? I've already written from here. Are you with me?
Yes, miss.
So total variable cost is 40,000. What will be the total fixed
Yeah,
cost?
so 50 minus 40, 10.
10.
And over here also it will be 10. Yes,
Yeah, so
this is for
50.
25,000 units. What is the total variable cost for 25,000 units?
50.
So see, you are getting 60,000. Yes? If
Yes,
I am
Yes.
making how many units now? I want for 35,000 units.
35,000.
What will be the total fixed cost?
10.
Okay. What will be the variable cost? What will be the
70,000.
variable cost? 35,000 into 2.
70,000.
What will be the total production cost?
80.
80,000. This is very important. If you want, I will pause the video. You all can do it once. Try.
Yeah, miss.
Okay. Now let's do the 29th one. What will be then the 29th one? A company provides the following information about its products. Are you with me? Can you hear me?
Yeah,
Yes,
miss.
Selling price is 100, variable cost is 40. What will be the contribution? 60.
Yes, miss.
Okay. Fixed cost is 21,600. Yes.
Yes.
And the break-even point is 360 units. Are you with me?
Yes, miss.
At break-even point, you make zero profit, zero loss. So can you tell me the contribution at break-even point? It will be 21,600. Are you with me?
Yes.
Okay, now let's see what is the question. This I just read the question and it came into my mind, so I did. There is no fixed format of it. If the business changes its production method, if the business is going to change its production method, contribution will increase by 10%. Contribution will increase by 10%. So let's see, we are changing the production, increase the contribution by 10%. What amount you're getting?
Total contribution or contribution per unit?
Anything does not make a difference. This is for 360 units. No? I'll change
Okay.
the total contribution. So this will become 23,760. Let's do the per unit also. It will become 66. Are you with me?
Yes, miss.
Yeah, miss.
If the contribution will increase by 10% and fixed cost will increase by 5%. So increase the fixed cost by 5%. 21,600 into 105%. So it will become
22,680.
22,680. What would be the effect on the break-even point? Oh, now this and this is not matching, right?
Yeah.
So I want to find the effect on the break-even point. No problem. I will find the effect on break-even point. My selling price is going to remain 100. My variable cost is going to remain 40. Okay, my contribution, I'm changing this. My contribution will become how much? 66. Are you with me?
Yes.
Okay. I don't know the total contribution. Minus the fixed cost. The fixed cost is going to become 22,680. Are you with me?
Yes.
So the profit will become 0. I want to know the new number of units. Or what is the effect on the break-even point? Let's check. If I want this analysis, my contribution should become now 22,680. Are you with me?
Yes.
Because the new contribution is 66. Check the number of units. Check the number of units that is going to give me a contribution 66 and total 22,680. How will you find number of units?
Total fixed costs by contribution per unit.
This. So what will the amount? So number of units which will give total contribution 22,680. What you're getting? 343.63.
Yes.
Okay. What is the original number of units at break even?
360.
And the new one is
344.
just minus and see.
Decreased by 16 units. So A.
Now, why I did what I did is a skill that has to come up over a period of time. I could have taken this, but when I could have taken this and equated with this, but this two is not coming equal, so profit will not become 0. Then immediately I decided that I will not take total contribution. In contribution, I will increase it over year by per unit, and fixed cost I will increase by total. I'm stopping the video. Think, analyze, and do. The 30th one. Read the question. A business is preparing its budgets for July 2014. Customers pays in the month following sales and suppliers are paid in the month following purchases. I have this information. What is the budgeted bank balance if the opening bank balance is to be 6,000 debit out of syllabus? Okay? This is not there. Y'all don't have budgets. Can I proceed?
Yes, miss.
Now we will do the next paper, that is May June 2014, paper 12. But only sums related to costing. Go to question number 27. Okay, do first 28. May June 2014, paper 12. First do question number 28. It is related to that what we did right now. How will you do? Tell me.
Units and total cost is
First, what
given,
will you
right?
find?
Variable cost per unit.
Included in?
The total cost, huh? So you will subtract, change
Change
in
in units.
cost upon change in output. So 16,000 upon 10,000.
So what is it? $16 per unit. So what is the total
Yeah.
variable cost?
So no, so 1.6.
1.6 or 10,000? 16,000.
Yes, it's 1.6 per unit.
Okay.
Yeah, even I'm getting 1.6.
Yeah, it is 1.6 per unit. So now, what is the total variable cost?
32,000.
What will be the total fixed cost if the total overhead is 200,000?
Uh, 8,000.
168, na?
Yeah, sorry.
Now check in this if your answer is correct. 168 plus 48, how much it is giving?
216.
That means your answer is correct. So what is your answer option?
B.
C.
Sorry, C.
Yeah, see.
Okay. Now come on, do the 27th one. Company
Miss, it's
uses
gonna end in less than a minute.
yeah. Company uses absorption costing and makes and sells one product. In the last month, budgeted overheads total 60,000. Budgeted production was 15,000 units. So budgeted overheads upon budgeted activity level will give me budgeted fixed overhead absorption rate. So 60,000 divided by 15,000. $4. Budgeted production was 15,000 units. Budgeted sales was